This is the Viper Wrap video for the week ending December 12th, 2025. It was another fun week in the markets with the FOMC meeting causing lots of volatility and Oracle shaking up the growth stocks. Let's look at some charts. This 260-minute chart of the S&P futures is an example of the crazy ride. You can see the sharp rally into the close on Wednesday in reaction to Fed Chair Powell's press conference. Big time reversal as Oracle reported, hitting the market hard. Then an equally sharp rebound into Thursday's trading. You can see we had a combination of longs being or shorts being stopped out, new short positions stopped out, new longs, and then finally on Friday we ended up in the sell mode here. And our 260 indicators, are still looking heavy. You can see that we have resistance here at 68.55. We closed at 68.33. For the week, the GLD gold shares were the best, up 2.3%. Transports had another good week, up 1.9%. Industrials and the IWM both up over 1%. New York Composite, as we've seen here, was up 0.89%. S&P was down 0.63%. Utilities were down about the same amount, and the big hit was in the NASDAQ 100, down 1.9%. A couple of videos ago, we looked at the monthly analysis as of the end of November. It clearly pointed higher, and of course, as I mentioned, I think in the Forbes thing, the strong monthly close in November, I felt was a positive sign. So updated here, you can see we broke out of this range in the NYSE Composite. You remember that's the broadest measure of the market, so that's a good sign. You would like to see the NYSE Composite leading rather than lagging. Down below, you can see the stocks only AD line. Typically, it's usually the weakest of the major AD lines. But you can see it closed at a new high and above this resistance. Similarly for the all AD line, it's right up at its old highs. Shows a very, positive trend. Typically if we're going to see a major correction, we're going to first see, a drop below that moving average, and then for the moving average to flatten out and decline. That's kind of what we saw in the first part of 2025 before we got brand new buy signals. Even though the SPY was down a bit for the week, AD line also made a new high on the S&P 500. Good long-term support at the moving average here, which is a good sign going forward. This daily chart shows that the R1 for the New York Composite was hit on Friday. It's at 22,165 with the R2 at 25,506. You can see that'd be a pretty good upside move. If you look at this trading range, that's a reasonable target. Down below here, you can see the NYSE all AD line on a daily basis. Broke out, pulled back. So, it's still in a positive uptrend with support at its moving average. Down below, we got a pickup in the bullishness, and the bull minus bear ratio rose slightly last week. Continue to think that's a positive sign, but we really need to see a strong surge in bullishness, getting the ratio right. 14% more bulls than bears. You'd like to see it get up to like 20, 25 before the rally runs into trouble. The daily chart here shows that on the daily AD lines, you can see that the S&P daily broke out above this prior high. Also, that was the case for the stocks only here. You can see this magenta or pink line here was the resistance level, and also the case for the NYSE all. That is a good sign that any pullback should be well supported. And of course, we did close, hit some profit taking, in Friday's session. Most of that, of course, was in the growth value relationship. You can see this is the weekly growth versus debt value. So it's turned down. So value has been leading since the start of October, really. This peak up here. So is this a major top? We'll look at a longer term chart in a second here, but the MACDs are kind of in agreement now on the downside. So we'd expect to see a further decline there. You can see the support going back into early in 24 and the start of 25. This chart of growth versus value shows the entire correction from the 2000 high when growth topped out, and this led to the value bull market that peaked in 2007 as growth again took over. So you can make a case that this is a major top here, but really, you probably have to undercut these lows to be confident of that. You can see the MACDs are on the verge of flipping down to negative, and of course, they have not confirmed the highs this year as they're below the peaks we saw in 2021. Of course, 21 was that late 21, early 22 was this sharp setback in the growth stocks. As we get into the sector, you'll see there's some strong action in the value when we looked at a couple of value names last week. This weekly chart shows you that once again the R2 and the Qs was hit a week ago, and then we closed lower. So that does favor some more weakness at the start of the coming week, but not necessarily. If we're looking at downside, you really got to see how well the 20-week has held up. So at 593, they're about 20 points below the close. That puts the 20-week EMA about 3% below Friday's close. You can see we have the R1 here, also that's for 2025. Of course, as we get towards the end of the year, we're starting to look at next year's weekly or next year's yearly pivots. Of course, they're based on the price range. Currently for the SPY, the pivot, of course, it's going to change by the close, is at 616.84, and that's, quite a ways below where we are here. Currently, it would take quite a correction in order to get down to the yearly pivot in the next few weeks. For the QQQ, the tentative or preliminary new yearly pivot is at 550.70, which is 63 points below where we are now, or almost 10%. You can see the AD lines here, are positive. Let's look at the NYS or the QQQ AD lines. Look at the New York Composite, new highs, new lows. It looks even stronger. You can see we're right up close to the high we made in September. No increase in the number of new lows, so that's good so far. Kind of the benchmark here is between about 180 and 200 new lows. Nothing real worrisome from the put call ratios. Total put calls closed at 0.91, so still a little bit more call buying. Market averages shot up to 1.14. Given how the Qs closed the week, that is not surprising. Volatility closed a little bit off the lows, but still shows a clear downtrend in both the VIX, below its moving average, as well as the VXN, well below it. So, once again, before we start, it starts to flash a warning. First thing is to move back above these 13-period exponential moving averages, 21, excuse me, and then we'll see what happens then. AD line here shows you the lower close, on Friday. With as the 20-period EMA was again tested, 679.83, and the 50 days at 674, which is right around the daily pivot at 673.35. So that's where you should look for support in the week ahead. Before we switch over to the watch list, give you a quick look at the SMH. Broadcom got hit hard late last week. sort of seen a rotation within those. Of course, that's the view of the bears are that semiconductors may underperform for the good part of the year. My crystal ball doesn't go out that far. Certainly on a short-term basis, we close below the 20-day, so we have the pivot there. Will the pivot hold or not? And if we get a bounce from that, that's going to tell you more what kind of bounce we get. You can see the volume did pick up on Friday. So, the ratio, SMH is no longer leading the SPY. OBV is still positive. If you look at XLK, which is, was roaring to the upside at the start of the week, it also got hit, 149.22, and got down, closing at 143.69, just above the pivot at 142.99. And you can see, that 141 down to 139 is a good level of support. RS shows an equally negative pattern. We had a nice rally here. The only tip off and why I didn't go back into XLK had me concerned was the low volume on this rally. It was okay up into here, but you can see the last 10 days or so, volume was quite low. OBV has stayed positive, so we'll be watching the pullbacks in these growth stocks in the next week or two. Let's dive into the sector reports. ETF first. You can see there was weekly sell signals in natural gas, two different ETFs, UNG and UNL. That'll be good for those of us in the Northwest that use natural gas. FXC currency, the euro currency, gave a positive signal, as did iBuy, which is a retail ETF. That's a pretty interesting development going into the last week before the holidays. If we drill down here, 75% are above their quarterly pivots, but look at the split here. In the growth sector, only XLV and XLY are positive. All the rest are negative, and also pretty much got new daily sell signals on Friday. Only 20% of the weekly are positive on growth, as opposed to 100% here on value. And you can see pretty good across the board. XOP is the only one that's negative on a daily basis. And on the leveraged ETFs, shorts still showing some greens, SDS, SPXS, SQQQ, and QID, 86.7 or 66.7 rather, positive DTS, but none weekly. That suggests that it's not time yet to move into the short. If we look at the long holdings, weekly are still positive, 100%. Daily, are mixed. TNA, is the only one that is positive currently. Looking at the sector report, some interesting things. PPG and Disney both weekly positive, as was both Visa and MasterCard. Also 3 days there. Combination, a bunch of financials, BLK, and also some industrials, MMC, as well as Deere, ADP, Nike hasn't been on this for a while, so maybe they're finally going to get a rebound. As CMG, which is acting better on a daily 3-day basis. If we go down into the breakdown here, this gets pretty some interesting turns on the RS charts in particular. So let's take a look at these. You can see in the energy, it's tried to bounce. Okay, so this is a tough one. I'm still not really a couple of oil stocks I like, but not the ETFs. You can see that if you look over here, you have Valero's a 3-day negative, and EOG is a daily. COP is one of the few quarterly pivot, just moved above it, and it's positive across the board, as is ExxonMobil, as is SLB. Not, as I mentioned earlier, XOP, the oil and gas ETF, is not acting as well. Let's go down to the materials. Just closed. Could be a potential bottom here, in the materials. And you can see, this. If that's the case, then we should see some opportunities here. Sherwin-Williams, ECL, PPG is one that just probably turned. Dow Chemical, um, DD, Vulcan Materials, FCX. Okay, gold had a good week, and so that's not too surprising. Newmont, we added to our longs, I think, in Newmont in the stock trader service last week, and we also added to GLD. Industrials, 75. Okay, so we like to see above 60, 75% 3-day, 50% weekly. So once again, you have, if this is a turn, DE and GE, are just starting to move, as is LMT. There are a bunch of aerospace companies that have done pretty well. Consumer discretionary, that's a tough one. We added to our longs on that last pullback, so so far so okay. Really going to see some of the XLY is kind of growth mainly, so we're going to be watching it closely. You can see CMG is one of the bright spots, as is Nike, we mentioned before. So Tesla's helping keep things moving higher, whereas the auto part people down here are not doing as well. The RS on XLY, it does look positive. Of course, when you just have a turn like you have here, industrials look stronger. You can always get a big hit down on the next week. So you'd like to see, it close back above its moving average. In other words, the fast back above the slow. You'd like to see a couple of weeks to confirm that. So nothing in the consumer staples. It still looks weak. Healthcare. I think the pullback in healthcare, is likely over. You can see UNH gave a 3-day at the end of the week. And most, there's a few ABBV and Amgen are negative, so those will be ones I'd be watching. TMO, also is quite a bit red, so look for a DTS there. Financials does look to pay at the bottom. Of course, that's a value play, so we recommended IWD, the Russell 1000 value, because it has about 20% in financials. We attempted to get in along the bank ETF, but we weren't aggressive enough buying, so we'll keep an eye on it. But you can see, Visa, JP Morgan gave a 3-day. BLK did also. MMC is looking pretty good. Technology, 66.7 have 3-day positive, so that's surprising. Daily 50 and weekly at 66.7. So if the decline in growth continues this week, then we're probably going to see that weekly drop below 50%, and we'll be watching to see if there's an onslaught of new daily negatives. Sort of a split bag, was Apple still holding up here, but Broadcom gave a negative DTS. Seemed like that might have been overdone on its earnings, but Oracle had had a wide reach. XLC, we still think that the correction in XLC is over. Disney obviously doing well, and Google, of course, also doing pretty good. So we're watching Charter, and lastly, in the utilities, had quite the shakeout there. They've gotten down to some pretty good support. No positives on the weekly or the 3-day, or at only 16% in the daily. So it's very oversold, so look for a bounce there. A quick look at the themes. Once again, look at the ones that are above 50. So AI robotics, some interesting names in here, and a few new turning positive. The AI mix gauge that was put together by Jerry and the team, 44.4. So still not above that 50 threshold. Same for quantum computing. Nuclear gauge, even more negative, 22. But these they have been correcting pretty substantially. So, you know, if you think that the market is still moving higher, as I do, then some of those groups should have another place in the sun as we get into January. Crypto infrastructure looks pretty sick, 10%. Strategic materials, 60%, so it's looking a little bit better. In terms of Bitcoin, it looks like maybe one more decline down towards 75,000 could complete the correction, but I'll probably write up something on it in the week ahead. So crypto, cybersecurity, 20%. Aerospace defense, 44, though we're starting to see some positive signs there. Infrastructure, still weak. And then lastly into NQ, only Apple and Tesla really are looking positive. Google is negative DTS. And then in the Dow has been screaming. So JP Morgan, United Healthcare are looking pretty good. So, we're watching Microsoft. Because its correction may be close to over, all red across the board. And, nothing's really changed there in terms of the longer term outlook. JPM also looking good. Well, it looks like our schedule is back to semi-normal. So, as always, though, send me your comments, positive or negative, tom@viperreport.com, and we'll be doing a little more writing now. Due to the surgery, we haven't been putting out too much. Let us know also what you'd like to hear about, particularly when it comes to techniques and indicators. I love writing about that. So have a great week. Couple more weeks till Christmas, so should be interesting. And monitor your portfolio and stops closely. Thank you very much.